Most beginners traders have no idea what a buy stop limit orders actually does. And because of that, they either miss a perfect entry or get caught up buying too high. In this video, I'm breaking it down step by step using real chart examples so you'll know when to use a buy stop limit orders, how it works, and why it will actually protect you from major slippage and bad entries. If you've ever been asked what is the difference between a buy stop and a seller stop, then this is your video. All you just have to do, grab a notebook. We are going to keep it simple and let's level up your level of entries so that you can trade the smart way.
Remember, this is not just a story.
Now, I'm shooting this video on Saturday, so don't worry why the market is not moving around this area now. We have actually two types of orders, and we have market orders, which is known as instant execution, and we have the pending orders. Pending orders, that means that when you actually place them, they're not actually going to be, you are not going to buy from the market price. Now, let's start with the simple. How do you get this? So if you go to trend or you just click this plus, most of the time, this is where we normally buy and sell from the market. So if you click the market execution here, you're going to see that we have the market execution, which is different in black, and the others are actually red and blue. That means all the rest are actually pending orders. Now, when you talk actually about the market execution, we are talking about the instant execution. That means when I am taking this market execution and I click sell or buy, then it means I'm buying from the market price, the price that you can actually see from the market. Now, when do you actually buy from this? When do you use this one? So assume now the prices are at your current price where you actually think that the price are either going to reverse or continue moving to the direction that you have been anticipating. So what you're going to do, you're going to either buy or sell instantly. So that is going to be very simple. So you can see buy market or sell market. So when you click buy or sell, of course, the order is going to be executed automatically, instantly. That's why I told you it's known as market execution or instant execution, sometimes in MT4. Now, what is now the rest that are called the pending orders? First of all, let's start with the buy limit and when you use it. Because when you actually just look at this, this different between the market orders, because the market execution just provides you with the stop loss and take profit. That is the market execution. That is known as instant execution. But when you actually go to the other orders like buy limit, is actually going to provide you with three things. That is the price, stop loss, and the take profit. What does that mean? Is that you actually can buy at a certain price that you really want, and this is buying below the price that the current price is. So assume now the price of the gold is at that 349 as you can see. So if you know that the price is actually going to drop and probably come back again, so what I'm going to do, you are going to place the buy limit here. So if I know that the price, for example, in this market, this is gold. So if this gold is actually, I'm waiting to see whether it's just going to come where I bought it at that 316. What I'm going to do here, I'm going to buy limit, and then I click 33, I put 316. Probably that is where you're waiting for the price to come through. And the stop loss, now you can adjust it to be below that one, probably at 300, and then the take profit actually has to be above that one. You know the price, the stop loss can actually, the TP can actually be around even 33.30. Even at that 330, you can see the current price is actually at the 349. So that is the buy limit. And you can see after buying, then we have the TP around that corner here. Now that is the buy limit. The sell limit is actually the same. It's the same but opposite. But this time, when you actually sell limit is actually the same, because that means that you are going to sell at a price. Probably you are predicting that the price of the gold is actually going to move higher, probably at that 370 around this area here, that 370 and that 370. I want to draw these prices here. So probably you are waiting for the prices either to come to this zone here around that 370. So what you're going to do, so you think that when these prices actually, when they come here, it's going to drop. So what you're going to do, you're going to place a sell limit. So you're going to put the prices above that, and you're going to, for example, that 372 stop loss actually can be above that, which is like 34. Okay, 3,400, and TP can actually be that 350, whether you think these prices are going to come to that place. Now that is the sell limit, of which is buy limit. Very simple and very clear on that. Now the next thing which is very important now is these orders that are known as sell stop and the buy stop. Now what are these buy stop and sell stop? Buy stop means that probably you are predicting that the prices are, when they move up, they are actually going to continue moving up. Now that is the time now you press the buy limit, the buy stop. Okay. Now assume now when I think about what I do, I think about these prices. Assume now we have the prices of the gold at this level here. Okay. Assume now we have the prices of the gold at this level, which is at that 350, the current price. And I think that when these prices actually hit that 370, the price is actually even going to move higher. Probably you are predicting about the breakout. The price is going to touch this area and then break out and start moving up. Now you actually place your buy stop around that place of the buy stop. So you put your buy stop there. So it means, and actually one thing that you have to know is that when you actually go wrong about these entries, what is going to happen to you is that there's actually going to be an error. That means that you are not going to place any trade. It's not going to happen. If you're going to place it on a wrong way, it's not going to happen, because you try to place a trade, it's not going to be placed. Now look at this. On buy stop, you can actually put these prices, and I want to practice on this with your phone. When you actually put a buy price, that means that, for example, I put at that 70, that means now it's like buying, but you are buying at a higher prices. Okay. Now the stop loss here can actually be like that 340, and TP actually have to be higher. Now can actually be like 34. Okay. Now that is now the use of buy stop. You are predicting that the prices, when they hit your level that you want, you can actually put that as the price that as the 370 here. Then you are saying that the price is going to continue moving up. It's the same opposite of it is opposite of this. It's opposite of sell limit. So the sell limit is when the prices actually drop to a certain area, like this one. Let me show you again on the screen, like where I have placed this buy of that 316. So I'm saying, because we have the current price at that 349, when the gold prices hit this, is actually going to drop. When it actually touches that 316, is going to drop down. So what I'm going to do, I'm going to place a sell stop around that 316, so that when the market touches that 316, is going to sell, and I can have my TP around that 3, and I can have my TP, stop loss, when the price actually reverses like that 330, and TP I can put it around 3280. That is good. And then you can see you can place order. But when you actually do it wrong, like for example, I click this 3350, you see you can't clock. You can see actually there's already changed the color, which means you can't place, and whatever you're doing is purely wrong. Okay. But sometimes if your price is correct and you don't place your stop loss and all others, you can still place, and maybe later place the stop loss and the TP. Now we have the last ones with the buy stop limit orders. Now the difference, this is the same, but it involves two perspectives of the buy limit and the buy stop, which is buy stop limit. That means that you can actually buy at a certain area. That you are saying that I want to buy when the market actually touches a certain area. Like for example, that let me give you that example here, that you are saying the prices I want to buy when the prices, I want to repeat this again, the current price is 33.49. Okay, the current price is 33.49. So you are saying when the price actually touches 33.70, I want to buy from that. But the limit, the maximum we exactly have to touch is 33.75. So you can have those ranges there to say that in case this happen, I don't want this. So that is the purpose of the buy stop limit. It gives you, let's even click this and see whether it gives us those options. You see that it asks us two prices, the price and also the price limit here. For example, we can have like 33.50 price. We can buy at that 360, and this one we buy it at 33. Okay, this is 33.60, and this should be 33.62, 33.58, around 33.58 stop limit prices. Okay, so you want to buy at those areas in between that region, so that when the prices drops or moves higher, then the prices are really not going to buy from that market. This again actually has an expiry, because you can see it as an expiry today specified. Then you can put even the date. This is so amazing, and it applies the same as the sell stop limit. I want you to practice this with your phone and see how amazing it is, so you can utilize using different strategies. All right, thank you so much for watching this video. I know it has been long, but keep practicing on this. It's very simple. If you have any question, let me just know it in the comment section. I'll see you in the next video. Bye bye.
Remember, this is not just a story. This is our